The stock market and President Trump. Joe Cantu here, and this is a Cantu Tactical Wealth Management 9-topic update and stock market forecast. The stock market topics are: number 1, losses; number 2, tariffs; number 3, where's the bottom of the stock market; number 4, why are we up when the stock market is down on our accounts; number 5, our strategy before April 2nd tariffs; number 6, our strategy after April 2nd tariffs; number 7, recovery process and expectations of the stock market; number 8, our plan to mitigate losses in the future; number 9, purchases we have made in this market correction. So let's get started. So number 1, the stock market by the S&P 500 is down about 10%. The NASDAQ is down about 13% due to uncertainty with tariffs. Now remember, I mentioned before that the market does not like uncertainty. So only the president really knows how these tariff negotiations and reciprocity works. But today in Canada, they have pulled back on their electricity tariff, and President Trump pulled back on his 25% aluminum and steel tariffs. In measuring volatility by the VIX, trying to determine where the bottom is, and every time the index has hit 27, the market has begun to rebound. In yesterday's sell-off, it cracked 27 and actually went down to 30. It is my indication that we are at a bottom. Now, I don't actually know if it's a bottom, but my analysis leads to this conjecture. Another point, when I see others thinking that the market is going lower, that is a contrarian signal that the market will rebound. Now, isn't it funny that we just came out of strong earnings seasons, of which were up 14% estimated annual growth, the strongest since 2021, and the naysayers are talking about a recession. They didn't say that during earnings seasons anyway. There's no way with all the economic indicators and the good jobs number that we're going into recession. Remember in 2022, all the economists talked about a recession, or there was going to be a soft landing, and they all turned out to be wrong. The Wall Street actually blamed the economists for completely missing the mark, and the fact that there was no recession and there wasn't even a soft landing. I turned out to be right, and I kept putting videos out describing this. So why are we up today on our accounts and the Dow and the S&P indexes were down? The reason is because certainty is beginning to creep back into the stock market. Wall Street is figuring out that the tariffs do not really impact technology stocks. Our firm accounts are approximately 1/3 in the technology sector. So the NASDAQ was up a little bit, particularly our stocks. So they were doing much better. So what about our strategy before April 2nd? We will be focusing on stocks clawing their way back up, and we'll be making some moderate changes on the way. into the positions that we see moving up. Even if they're international positions, if they're moving up, we will probably want to own them. Again, we're focusing on finding stocks moving up, again, as certainty moves back into market. Let's face it, everyone on the planet already knows tariffs are coming April 2nd. So Ronald Liston and I believe that those losses are already baked into the stock market correction that we're in right now. That's why the market has gone so low. So it is quite possible that many sellers may buy on April 2nd, thinking that it will be another major sell-off. If everyone has the same idea, it is possible that the market may be up on that particular day. We'll see. Now, we will be keying on industries and stocks we believe are oversold, looking for opportunities to make money on the rebound. This is a strategy after April 2nd. We could be adding to the positions and shifting from other positions that we already own. Yes, if the security is moving up, it will be on our target map of a buy consideration. Number 7, we believe the recovery process began today. Uncertainty on tariffs, but the vision of President Trump seems to be teaching all of us on the art of the deal in his business mind. As Wall Street learns his negotiations are working, it seems to settle down the stock market and provide more certainty for better days. As far as the time frame goes, expectations are for us to be recovered by the end of July, by February 1st. Why? July is another earnings season month that lasts through mid-August. Historically, July is the strongest earnings seasons of the year, reporting on the spring thaws of transportation and buildings coming out of the winter. Our plan moving forward to mitigate losses is to use our moving average indicators of selling as before. The reason we did not use them this time was because when we used them in 2024, the stock market rebounded so rapidly and we ended up with a lower return than the stock market. Well, we're not doing that again. We are sticking to our sell trigger signals for consideration to sell and reduce our positions. You know, we could even use inverse positions to possibly make money when the stock market is falling. So we have made some minor changes in our accounts in this market correction. We made some additional technology purchases and recently bought McDonald's and a digital currency exchange stock in some selected positions in our accounts. Now, let's take one giant step back and look at the stock market from the big overall picture by comparing it to the past. So number 1, this is not the first time the government workforce was reduced and fired. President Clinton cut 25% of the government workforce in the 90s. Also, he had the technology industry booming at the same time, with everyone getting ready for Y2K when the planes were supposed to fall out of the air. Remember that? So what was the result of all of that? Well, we had a good surplus in the American economy, and the stock market rallied for the next 5 years. Today, we have something very similar. Government spending and regulations are beginning to be cut. Sound familiar? Taxes are being lowered, and that should lead to higher corporate profit margins. And we also have a technology boom in AI, artificial intelligence. My guess, this will lead to a higher stock market as well. It's funny, history has a way of repeating itself. Now, on tariffs, only the president really knows how these tariff negotiations work. Reciprocity on tariffs could actually lead to lower prices for both countries, and lower prices and lower inflation for both countries. For example, today there was reciprocity on tariffs with Canada. Canada pulled back on their electricity tariff on the border, and President Trump matched and pulled back on aluminum and steel tariffs to the country of Canada. You know, it's kind of funny. President Trump is definitely giving the world a lesson on the art of the deal and how to use tariffs to benefit our country. So the market is forecasted to move to higher ground from Cantu Tactical Wealth Management. Population is increasing at an exponential rate, which we believe will lead to more spending for businesses in the future. In conclusion, our short-term forecast, which means less than 1 year, is the stock market will recover to higher ground. Our long-term forecast for the stock market expansion means greater than 1 year, is that the market will increase for the next 3 years due to artificial intelligence and actually flow over into the international markets. Our actions, we remain equity heavy in our retirement and investment accounts. And most important note is that the NASDAQ, in a press release, announced that it will be going to 24-hour trading. Now, I do not know when this will happen, but I think it will happen this year. Now, the New York Stock Exchange is not doing that, just the NASDAQ. But we'll have to wait and see what happens. I have some disclosures at the end. Take a listen.
Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager. Over 10 years ago, he created Cantu Tactical Wealth Management, which actively balances and selects investments based on a tactical approach rather than the traditional strategic management method. Instead of the buy and hold philosophy, he believes in the pursuit of finding investments showing momentum, performance regardless of the direction of the market. His experience includes IRA accounts, 401k rollovers, trusts, endowments, defined benefit plans, 403bs, and 401k plans. Additionally, he served as a night college instructor for seniors teaching high net worth retirement and estate planning for 14 years. Podcast views and personal opinions are for educational and entertainment purposes only and does not constitute a recommendation. Investing has risk of loss, and you should consult with your own advisors for any financial decisions. Cantu Tactical Wealth Management and Joe Cantu are a fiduciary firm and registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.